Well, hi. We're talking about Reliance Industries. The results are on Thursday. So let me tell you what are the expectations for Reliance Industries. The net profit and the GRM numbers and the Petchem performance. These three are the key numbers which you should watch out for assessing if Reliance Industries basically is delivering a superlative performance or basically an above market estimated performance. So the net profit is expected basically to grow to 8,000 crores, which is like 6% growth versus the last year. Now, sales, EBITDA margins, those actually are going to show good growth. The margins could be moderating slightly, but that's not a matter of concern. The GRM, the gross refining margin, that's the number, and the consensus estimate is around $11 per barrel. Now, a lot of estimates are there. One of the brokerage estimates is around $10 also. But again, broadly, most of the brokerages are estimating around $11. And that's roughly actually around $4.5 premium over the Singapore benchmark. Now, how Reliance actually can outperform that sort of benchmark would be purely based on the crude procurement, Iraqi Basra crude more, the heavier crude more. The WTI Brent, that sort of differential has narrowed down. So which implies, and also if I look at the cracks, again the petrol cracks, those basically have contracted roughly by $0.8 per barrel versus last quarter. If I look at diesel cracks, those have also contracted. So largely this time it's not a crack differential. So outperforming Singapore benchmark would be actually really tough in terms of $4.5 or $5 per barrel. So yes, $11 around plus minus 0.2 and number comes around that level, I think it should be pleasing to the street. So 10.8 to 11.2, anything around that should be, I think, taken with both hands. Now also throughput is expected to inch higher. Now throughput is expected to be actually higher by 3%. So which means if more volumes have been pushed into the market, the revenue is actually going to go up more. So that's actually something which is good news. And also June quarter traditionally is a very strong quarter. So that you should actually expect anyway. Now there actually was expected inventory loss of $1 per barrel was expected. So perhaps that is one number which actually you should really watch about. So what sort of impact it could have on the blended GRMs. Apart from that, if I look at the retail margins are expected to improve drastically and materially for the diesel retail margins. There is again one detail which perhaps is going to come later in the presentation. But in terms of the headline numbers, when the press release comes, the Petchem segment is the one which we will all be watching for because the margins are expected to improve materially. Look at the polymer, how it has done in this quarter. Polypropylene spreads up 5%, polyethylene spreads up 9%, PVC spreads up 6% versus the last quarter, which is a good strong performance. Polyester spreads, again, those are a mixed bag because polyester fiber has gone down, yarn has gone up, but so polymer is the one which is going to count about, and Petchem margins are slated to expand, and I think that is going to offset the refining moderation, the GRMs. Overall combined business, I think, is looking stable and better. Now, the other segment, the retail segment, in terms of profit contribution is lower, but you're going to watch out improvement in the retail volumes also because of a very splendid June quarter sales. And again, what sort of investments are going into the store count expansion, whether the wholesale retail stores, they are getting expanded very heavily. That is one factor which everybody is going to watch out for. And all in all, the basically the headline grabbing and the showstopper of the business right now, which everybody talks about, is Geo. So Geo, what's the current subscriber status? How many subscribers are paying? And then what about the Geo fiber plan? Then what about the Geo feature phone? I would suspect in the result it's not going to come. Perhaps going to be reserved for the AGM. But then any more details around the telecom is going to be welcomed by the investors. In terms of P&L impact, it's not going to impact because telecom at present is being capitalized, so which means it's not going to go into P&L, it's largely into balance sheet. So all in all, Reliance Industries should be actually posting stable set of numbers, $11 GRM, 8,000 crore profit, and Petchem margin expansion. These three are the metrics you should judge Reliance Industries result for, and make strategies according to that. See you later.